Karan, we are live now. You can start.
ओके टीम कासा व्यूअर्स, मैं सीए करण सिंगल आज कासा इस महाकुंभ के थर्ड डे में आप सबका बहुत वेलकम करता हूं। कासा टीम अपने 11 साल पूरे करने जा रही है और आप सबके इस प्यार भरे स्नेह भरे वातावरण ने जो आप सबने प्यार दिया, उसी के दम पे हम ये गरिमापूर्ण 11 साल पूरे कर पाए हैं। और ये हमने 5 लोगों की मदद से शुरू किया था, हम 5 लोगों ने मिलकर शुरू किया था और सुमित जी ने इसकी संरचना सोची थी और इसकी नींव रखी थी और तब से लेके आज तक हम 5000 लोगों से ऊपर जो है मेंबर्स हो चुके हैं। तो उसके लिए मैं सुमित जी को भी बधाई देना चाहूंगा और आप सबका धन्यवाद करना चाहूंगा। तो कासा महाकुंभ में हमने ये 11 दिन का एक विशेष प्रोग्राम रखा है कि 11 डेज तक हम 11 डिफरेंट टॉपिक्स पे जो टॉप फैकल्टीज हैं उनके साथ हम डिस्कशन करें और टॉपिक्स को अच्छे से हम डिस्कस करें। तो उसी श्रेणी में आज हम टॉपिक डिस्कस करने जा रहे हैं वैल्यूएशंस अंडर आईबीबीआई आज के टाइम में एक हॉट टॉपिक है और एक नया स्कोप बन के आ रहा है प्रैक्टिस प्रोफेशनल्स के लिए कि जिसमें वो प्रैक्टिस कर सकते हैं और जिसको वो चूज कर सकते हैं अपने फ्यूचर के लिए। तो आज हमारे बीच सुमित डड्डा जी हैं जो कि वैल्यूएशन एसएफए वैल्यूएशन के अंदर फैकल्टी हैं सभी प्लेटफॉर्म्स पे और बहुत ही अच्छे स्पीकर हैं और बहुत बढ़िया तरीके से टॉपिक को ऐसा समझाते हैं कि आपके कोई डाउट्स बचते नहीं है। अच्छे स्पीकर हैं और बहुत तो मैं सुमित स्पीकर आज का सेशन शुरू करने से पहले सुमित जी से रिक्वेस्ट करूंगा आज के जो हमारे गेस्ट हैं लाठर साहब एंड करुण नागपाल जी, उनका भी एक बार वेलकम करें और सेशन को स्टार्ट करें।
थैंक यू करण जी। जैसा कि आपने बताया कि सभी लोगों के क्यूमुलेटिव एफर्ट से हम यहाँ तक पहुंचे हैं, तो सभी लोगों को धन्यवाद। और आज के हमारे गुरु भी रहे वैल्यूएशन जिनसे मैं सीख रहा हूँ, ऑलरेडी मैंने सीखा है। सुमित डड्डा जी सर, वेलकम आपका। और हमारे गेस्ट एसपी लाटर साहब जो करनाल से जुड़े हैं। करनाल में इन्होंने 2016 में चेयरमैन थे, उसके बाद इन्होंने बहुत अच्छे काम किए जिसके माध्यम से मैं करनाल से कनेक्ट हुआ। और आज सबसे पहले मैं करनाल में अगर कोई चीज किसी को याद करता हूं तो लाटर साहब, सर आपका वेलकम है। थैंक यू एंड करुण नागपाल, माय colleague in the valuation course and joining from Chandigarh, he is one of the faculty also and एक दो इन्होंने हमारे वेबिनार भी एड्रेस किए हैं, तो बहुत अच्छा लगा। करुण जी आपका भी इनपुट लेंगे साथ में। तो बिफोर स्टार्टिंग ऑन टेक्निकल टॉपिक, आई रिक्वेस्ट लाटर सर टू से few words as a word of wisdom.
Sir, first of all, I would like to thank you so much to give us a opportunity in Team CASA. Thank you very much. And I would like to convey congratulations, many congratulations Sumit ji and your team, doing from very starting valuable services to the member. Each and every time when we open the eyes, CASA team message came on the WhatsApp and we are alert. In each and every month, we need not to say calendar for which for every compliance. Yesterday I am seeing then Bank of Baroda branch का जो कंकरेंट ऑडिट की लास्ट डेट है, तो वो भी सर ने इतना फास्टली उसको बिल्कुल सही टाइम पे कन्वे किया है जो हम मेंबर्स मोस्टली भूल जाते हैं। तो सर मैं टीम कासा को बधाई देना चाहता हूं और ये जो A to Z सीरीज सर ने शुरू की है, इसके अंदर कोई भी मैंने देखा कि कोई भी अनटच्ड टॉपिक नहीं रह जाता है मेंबर्स के लिए, और हम एक वीकेंड में के अंदर ही सब कुछ कवर कर पाएंगे। और मैंने अपने दोस्त से भी कहा है, अनिरुद्ध जिंदल जी से, कि भाई चैरिटेबल वाला जरूर एटलिस्ट कर लेना, गिरीश आहूजा जी वाला, तो वो तो बहुत ही इम्पोर्टेंट है हम लोगों के लिए। तो ऐसे टॉपिक सर ने जो रखे हैं जिसके ऊपर हम नहीं जा पाते, कई बार अनटच्ड रह जाते हैं, तो सर ने बहुत अच्छा ये एक सीरीज शुरू की है, इसके लिए मैं इनका बहुत धन्यवाद करता हूं। और सुमित जी से जो इंट्रोडक्शन हमारी हुई है सर 2016 में हुई है, और जब से अब तक करनाल ब्रांच से इनका जो लगाव रहा है वो बहुत ही अच्छा रहा है। मैं करनाल ब्रांच की तरफ से एज ए पास्ट चेयरमैन मैं बोल रहा हूँ, तो इनका बहुत बहुत मैं आभार प्रकट करता हूँ। और करनाल ब्रांच में जैसे भी कोई भी स्टूडेंट इवेंट कभी हुई है, हमने छोटे से शॉर्ट नोटिस पे भी इनको बुलाया तो ये हाजिर रहे हैं, तो मैं इनका बहुत बहुत आभार प्रकट करता हूँ सुमित जी का। और इन्होंने इवन स्पोर्ट्स इवेंट्स जो ऑर्गेनाइज हुई है हमारी करनाल ब्रांच की तरफ से, NIRC की तरफ से, जहाँ पे भी हम मिले हमारे खुले दिल से मिले हैं, फ्रेंडली एनवायरनमेंट इनका रहा है और एज ए फ्रेंड हमारे को इन्होंने ट्रीट किया है। जब ब्रांच ओरिएंटेशन प्रोग्राम हुआ करनाल ब्रांच में नूरमहल में, इन्होंने हमारे को डायस शेयर कराया NIRC का, तो CC मेंबर्स के साथ में। तो ये हम मेरे लिए फर्स्ट टाइम 2016 में ये बड़ी उपलब्धि थी कि मेरे को सबके साथ बैठने का मौका मिला, और मैं फर्स्ट टाइम ही इलेक्ट हुआ था, फर्स्ट टाइम ही मेरे चेयरमैन बना था, तो एक एनकरेजमेंट मिलती है। तो उस टाइम से आज तक मैं सुमित जी का बहुत बहुत आभारी हूँ, और सुमित जी ऐसे ही काम करते रहे। थैंक यू वेरी मच। और नाउ आई वुड like to extend my welcome to our panelist CA Karun Nagpal ji, CA Singhal ji, and today's guest speaker Sumit Dhadda ji. Sir, warmly welcome and thanks from and many congratulations from myself. Thank you very much. Thank you Sumit ji.
थैंक यू लाटर साहब। नाउ टेक्निकल सेशन की तरफ स्टार्ट करते हैं। तो मैं करुण जी आपके डिस्कशन कुछ एग्जामिनेशन इश्यूज में आपसे लास्ट में डिस्कस करना चाहूँगा। उससे पहले मैं सबसे आज के मेन गेस्ट स्पीकर सुमित ढड्डा जी से रिक्वेस्ट करता हूँ कि टेक्निकल सेशन को आगे बढ़ाएं प्लीज सर।
थैंक यू CA Sumit Dhadda ji. First of all, I thank you for giving me the opportunity. Now, completing 11 years is a matter of big celebration. Just give me a minute.
जी सर।
सुमित जी आपको इको आ रहा है क्या? मुझे थोड़ा सा इको आ रहा है।
पहले आ रहा था, अब नहीं आ रहा है,
थोड़ा
कहीं
इको
और
है।
से आ रहा था, मैंने म्यूट कर दिया, अब इको नहीं है।
Okay, so starting any organization requires a lot of guts, and when you are only starting with 5 people and growing to 5,000 plus in 11 years is a remarkable achievement, and it shows that your hard work and the group, the work you would have worked in last 10 years, people find value in the group, and that's why they connected. Because nowadays we all know we have so many groups, n number of groups. Each person will have more than 10 groups physically in any of parts of the profession. But when somebody is joining to any part of the group, it means you are getting some value. And I had the fortune of knowing you from last few years, and I saw how much seminars which have been done in last at least in COVID period, and which was very valuable. Now, one thing we need to understand: nobody is expert in any field ever. We all learn by doing, and especially this valuation. Because for accounts, you can always have a debit credit rule. You can always define the rules 2 plus 2, 4. But in valuation, you cannot define any rule. It is all subjective. There are principles, there are approaches, but no standard can say you need to do 2 plus 2, 4. It all depends on what we are doing, how we are doing. So today we'll try to keep just basic concepts of valuation, no technical hardcore understanding. We'll just try to understand what is the process now, what is the flavor now, and where the profession is heading. Because the most important thing to know for all practitioners is, if I need to do specialization, the path which I'm choosing, will it give me value or not? That is most important. So I'll quickly rush my journey. Those who know me earlier have known this. Those who don't know me, I did my CA from Jaipur. I secured first position in CA Inter in CIC region. Then I became CA in Jaipur. I moved to Delhi for a few years to practice initially in 2003. Then I moved to Mumbai PwC. I worked in audit division there. From there, I moved to Middle East KPMG. So I worked in Bahrain, Middle East for 8 years. And then I worked mainly in IFRS and Indies and little bit on valuations, very little valuations abroad. And 3 years back, I moved back to India, Jaipur. Luckily, when I moved back to India, new things have come. Indies, IBC, valuations, and these three areas are new for all. And the best part of these areas are, whoever grabs first opportunity will have an advantage. Early mover advantage you will always get, and the level playing field becomes easy for you all. Nobody can say I am based at Jaipur, I don't have opportunities, or nobody can say I'm just a 5-year-old practicing C, I can't have opportunities. These are just excuses now, because if the profession is just newborn baby, whoever becomes first mover steps will always get advantages. Now, valuation we all talk about, but do we value all transactions? For example, if I'm going to buy a shirt, let's say Sumit ji is going to buy a shirt from Zara. He went to Zara shop. Will he do a valuation that Zara is selling this shirt to me at 10,000 rupees per shirt? Will be a value to me or no? So generally, we do not value all transactions. The transactions which already have defined MRPs, so and transactions which are already prevalent in use. So each item, you can always do a bargaining. Bargaining is different from valuation. Valuation is when you are willing to acquire and there is no fixed price for it. So valuation is just when there is nothing, no price available, then you try to make a estimate number. But for items which are already having a prices, fixed prices, you don't go for valuation. Very basic understanding. Can I value Taj Mahal? So if I want to value Taj Mahal, is it possible to value Taj Mahal? Because if we are talking of a valuation, can we do a valuation of Taj Mahal? Some people may answer, no, you cannot value Taj Mahal because it's antique property of India. Government doesn't want to sell it. You cannot value monuments. Somebody may still, if anybody would have read valuation standards, can come up and say, yes, we can do a valuation of Taj Mahal also. Can we value a CA degree or my CA firm practice? I know we all have CA degree priceless to us. We can never ever give any value to CA degree because we earn, at least my bread and butter comes from this degree. So it is most sacrosanct degree for me because we love and respect this like any other thing. After temple, CA Institute becomes our another temple because that's the degree we are all associated with. Our mentorship, everything, our association because of the CA degree. But Sumit ji, just if I can just take 2 minutes from you, would you think we can value Taj Mahal or CA degree on a overall abnormal basis or normal basis?
So I don't think it is not possible.
Okay. Now I'll tell you a very funny true story. It's a funny true story. So I'll not name the persons because it will lead to his privacy rights issue. So in North, we were doing CA. So there was one typical a guy who was also doing articleship with us, and he was also preparing for a CA. So, and he was from a very filthy rich business family, very big business family. So we asked him, and he used to always say, we used to always ask to all, once you become CA, what will you do? He said, once I will become CA, our choice will be either go with the job or go with practice. And his answer was always, I will always sit on my father's shop because he has a business shop. So we used to always ask him, if you need to sit on business shop, then why are you struggling so much in CA? It's very hard, laborious. You should have done MBA, sit into business shop. So his funny argument was, in our community there is a trend that if you are a BCom, when you go for a marriage proposal, you are estimated at different value. When you are a chartered accountant, you are estimated at a different value. So I was surprised that how come somebody can even consider a degree in a matrimonial prospects. So, but that was one of the part. Now coming back to valuation of anything, there are two things. One, I cannot value emotions. Your love, you cannot value love. How much I love my institute or my degree or my family or anything, we cannot give a quantification. Similarly, hate. But now coming to all other things, we all can value. And there are only three approaches globally: past, present, future. If you apply any of these approaches, you can always get a value. So the basic approach, if I want to value Taj Mahal, I can find out how much marble was purchased in 1600 AD, BC, 1600 AD. Shah Jahan would have bought marble at what price? I could do a replacement method today, find out the inflation price of marble, and that can be one of the benchmark to value. I do not say it can be the exact value, but you can always do that. How much is the current market price? Third, how much ticket we are, because when you enter into Taj Mahal, you need to pay a ticket to visit. So how much ticketing income comes, how much future tourists will visit, that income approach I can also do. Similarly, if I use these approaches, cost, market, income, I can also value my CA degree or CA firms. A lot of CA firms, when they are sold, so suppose there is a big firm who have worked for 20, 30 years now, and now they have nobody in family to inherit or they want to exit. So they do a analysis, they do their valuation. And recently, last 3-4 years in India, a lot of CA firms have change their hands from one firm to another partnerships just because of valuations. So they take how much current clients on the base we have. So suppose your current billing is, let's say, 50 lakh rupees bill a month, which makes up to 6 crore a year. So that becomes your current cash flow. How much in future it is expected. So then you allow them. So there are various ways, but all comes under three methods: cost, market, income. Whichever you think can be reliable. Global standards have given three approaches. There is not mandatory to choose. We need to understand one basic difference between India and abroad. In India, they prefer choose only. In globally, they say choose only one method. So if I want to choose cost approach, I will do a valuation as the cost approach only. I will disregard market or income approach. But in India, we are allowed to do a combination of all three. So I can do a valuation for all three approaches, give weightages accordingly, and arrive at a number. Globally, arriving at a combination is not preferred. They say it is better to do only one method. And if there is a huge variance coming in another method, then we need to figure out what's wrong in which method. Now, why we need valuation? We need valuation, and from last 3 years, once the rules have came in, we are talking a lot about valuations. So first of all, who is responsible for getting valuation in India? The first entity, the body which is responsible for getting valuation in India very fast is Insolvency and Bankruptcy Board. And we need to thank IBBI board for acting very fast, because this valuation rules came in 2013, Valuation Act came in 2013, Companies Act, but the rules did not get passed till 2017. Because IBC came in 2016 and the IBC requested MCA that if we need to get IBC in place, I need a valuers. So if I don't have a registered valuers, my IBC cannot kick in. Because to kick in IBC, I need to get a valuation done. So if I need to get a valuation done, we need to have a registered valuers. So now we got registered valuers. Now we need valuation because it is always said that it is better to be roughly right than precisely wrong. A valuation may not always give 100% correct number, because valuation is always like an opinion. But why we get a valuation done? Because when, as I mentioned earlier, we don't have a fixed MRP of transactions. So suppose if any company wants to buy another company, let's say Facebook is investing in Geo. So in that case, there is no ready-made market price available that, okay, you value at this price. So then Facebook will get a valuation done. And value will always give an opinion. He will say, this is according to me, best estimate, this could be the value. It may not always be the best number, but this is what it thinks. And your valuation report works as a benchmark number for negotiation. Because practically it will never happen that whatever value I have given. So suppose whoever would be the geo value, who would have done geo valuation, if they would have given a value to Facebook, Facebook may would not have directly only invested that value. There will be a negotiation between Facebook and Geo, but this negotiation starting point will always be what is the valuation has given a value. And this is one of the reason nowadays all big assignments, all big listed companies, when they do assignments, buy side and sell side, they always get valuation done from two different entities together to get the more authenticity to the valuation. So recently, if you are aware, India Bulls did a valuation with India Bulls valuation merger announcement with there's one group started with E. Uh, Empire Group. They recently did one transaction, and two different big valuation firms did the valuation together, so that whenever there can be an iota of doubt, it can be substantiated that two firms would have given independent valuation. So that is the reason valuation is always important. Whatever transactions we do, we need to have a valuation. If you are doing M&A, mandatory under Companies Act, we need a valuation. Nowadays, even if you are doing 100% subsidiary merger into holding company, ideally you don't need a valuation. Ideally, but still, a lot of NCLT insists get a nil valuation report from a registered valuer. That why valuation is not required in these kind of cases. So we need a valuation almost in all transactions we do. If you're doing an investment, mandatory required. If you're coming investing from outside India, anybody is investing in India, you need a valuation, not in Companies Act, but at least in RBI and FEMA. If you are raising startups, raising fundraising from external shareholder, apart from existing shareholders, you need a valuation. Currently, in regulations, Companies Act and IBC supports registered valuer 100%. SEBI supports little bit as of now. Income Tax Act as of now do not recognize at all. We understand from one of the council members in his address recently, from last 1 year onwards, they have 1 year before, they have sent a request to income tax to at least consider registered valuers also in the definition of accountant under Income Tax Act, but that no action has been taken as of now. So they are also pushing it. And in India's, it's a huge opportunity for valuers, because in a lot of India's assignments, valuation is there. And particularly this COVID period, when everybody was, most of the people were at home and not much involved in the work, valuers were very busy, at least for all big listed companies. Because what happened in this COVID period, impairment testing triggered, because under India's 36 of impairment, there's a condition called external triggers, where external factors, something happens which changes the economy, then it shows a symptom that a company need to look into impairment testing. So all big firms who are auditors of big listed companies, they mandated all their clients to get the impairment testing done by registered valuers. So many registered valuers I know in Delhi, Mumbai, Chennai were all busy in doing only in impairment testing under Ind AS from April, May, June, July. They were too busy. So that was one of the assignments recently. A lot of people take a new area, and this will continue to keep at least for 2-3 years impairment testing, because till 2-3 years economy will not be as normal it would be as it was in the last 1 year. Now, as I mentioned, this field has started new. 2017 onwards, in Companies Act, this is the most exciting field for practitioners. So IBBI is our governing board as of now. So IBBI is the regulator who regulates. We have 3 asset classes: SFA, plant and machinery, and land and building. Chartered accountants, CAs, cost accountants, MBAs can only register in SFA. People who have a technical BSc or who have done BTech, they can do the plant and machinery and land and building. So there are 14 RVOs as of today, which are governed by IBBI. All RVOs have same standing. Anybody can register with any RVO. You need to complete 50 hours training, and after that, you can register for exam. You can pass the exam and can register yourself in the respective asset class. These asset classes becomes very important in case of IBC assignments, because a lot of time it becomes a debate who will value what. Inventory is a question which is always discussed at all forums wherever IBBI is there. Recently, it was discussed one of the IBBI professional from the IBBI side, that who should value inventory. He says, see the nature of the inventory. If it is land and building, it will go to land and building. If it is plant and machinery, it will go to plant. Remaining anything will go to SFA. So securities and financial asset becomes a residual category, and then it becomes a challenge for us. So those who will be registered valuers or would be becoming in process, once you become RV, in that scenario, whenever you are doing any IBC assignment, you need to be very careful on inventories, because there are certain inventories which are too technical in nature and which we may not have the capability. For example, the company is manufacturing chemicals. So chemicals, we may not know the value of the chemicals. We can always find out the price, what was the last bill. But when we talk about what is the actual value, fair value, it becomes difficult. So that we need to be very careful. As of today, if we talk, we have 1205 registered valuers who are registered with SFA asset class. Land and building, we have 1741, and plant and machinery, we have 358 pan India. Out of 1205, around 670 members are registered with ICAI RVO, and remaining are registered with different RVOs. We have 14 RVOs, as I mentioned. But interestingly, this year we have seen a surge in registered valuer entities. Now earlier we used to have only 2 or 3 registered valuer entities from last 1 year. In current year, this number went up to 26 registered valuer entities. And there is one reason for that, because last 2-3 years, everyone was working in silos, in individuals, and everybody was doing good. But now what happened this year? A lot of banks and a lot of IPEs have made a policy that now we will appoint only registered valuer entities for their assignments. Commercially and logically, it is very wise decision for these entities, because if I am a bank, if I need to get a valuation done, I would not like to waste my time in appointing 3 different persons, one of SFA, one of land and building, and one of PM. So what would be the better approach for our organization would be to find an entity who has a valuer of all 3 asset classes in it. I will give him one assignment to them, and then they can complete it together. And a lot of MNC clients are also insisting now that we do not have comfort in individual. It's not they have the doubt on the capability of an individual, that he may not have the bandwidth. The doubt is because MNCs always like to prefer with corporate entities. They would not like to prefer much on individual per se. Because here, as per current structure, as a Sumit Dhadda, I can issue a valuation report of any largest company in India. But then, when they present to the shareholders, my valuation is done by Sumit Dhadda, an individual registered valuer. It creates a question mark on the capability. that why he is an individual, why we are not giving to the organizations when now we are having so many entities also working in it. And you will always appreciate a firm will have a more better tangible value than a individual. Even though in both the places work will be done by individuals only, even if it is a firm, signature will be still mine. But the way world will look at it will be different. And that is the reason now people are working more on entities perspective. Now, after 2017, when the rules came that we need to have registered valuation rules under Companies Act, it caused a lot of confusion in the profession and industry. And a lot of people were confused that what should we follow? Because there are not only Companies Act, there are Income Tax Act, RBI Act, and one transaction impacts all acts. For example, and why this was causing a problem. For example, if I am a company, a private limited company, and I'm issuing a shares to a third party, a new shareholder, and at a discounted cash flow, at a premium. So my company was last 5 years running. My face value is 10, but I'm issuing at 50 rupees because that's the discounted cash flow we use. So people thought and industry thought, okay, we will just get a valuation done from a registered valuer in Companies Act, and that should be the end of the story. But then that was not the actual concern. The concern become much more wider because in this transaction, we got almost 3 acts involved. One is Companies Act, second would be Income Tax Act, and third, if I'm issuing one shares to foreign citizen also, then I need to have a RBI or FEMA regulation in place. And the irony is, one's registered valuer certificate does not work in all 3 departments. So for each different act, I need to get a different certificate. Now this was causing 2 problems for client. At least 3 problems. One, first, the biggest problem is he was always worried with the fees. So he was worried if I need to pay Sumit Dhadda under registered valuer, Companies Act, I need to pay him one fees for one certificate. If I need to pay Sumit Dhadda under Income Tax Act for a chartered accountant or a merchant banker, another fees for it. Third, if I need to pay Sumit Dhadda for RBI regulations, another certificate, there will be another fees for it. So he was not happy with having so many pieces. Second, you would not like to have 3 different personals because you need to again coordinate with 3 different personals. And the third biggest challenge he was facing, all these 3 acts will have a different rules, and it may happen if the persons are different. So if I am not a merchant banker, I cannot issue a report under Income Tax Act. A client need to get a merchant banker report done. Then what will happen if the values differ? So if I given a fair value of 50 rupees in Companies Act and merchant banker says, no, according to me, the value can be only 30 or value can be 100, then what should a client do? And that was actual problem, and which is still a problem. It is still has not solved. So what is happening? What is the current position? In Companies Act, only registered valuer is applicable and only he can sign. In insolvency, bankruptcy code, IBC, it is only registered valuers who can only issue a valuation report. And there are minimum 2 registered valuers required for each asset class if they have those assets. So this is again a good opportunity for professionals because there are so many cases happening in IBC, and if you know the industry going, we expect after next year so many cases further to come because the real impact of COVID, the lockdown and the business problem people face will actually come after next cycle. So when the next cycle came and a lot of business will go into trouble, the banks will go into IBC. In that case, opportunities are there. SEBI recently has accepted RV in a very small, minuscule frame. There are three guidelines: InvIT and Real Estate Trust REIT guidelines, where registered valuer has been accepted. But generally, in all other guidelines, whether it be listing guidelines, whether we be it delisting of shares, or whether be it preferential allotment under Listed Companies Act, listed SEBI regulations, it is still chartered accountant or a merchant banker. So it's still, we are expecting SEBI to take RV very soon because things are getting pushed there. Income Tax Act, only CA and merchant banker as of now. Chartered accountant can do all certificates in income tax except wherever there is a issue of shares at DCF method. If there is a DCF method premium, it has to be done only by merchant banker. Otherwise, a chartered accountant certificate can work. And in case of RBI, again CA or merchant banker. Of late, we are hearing, and it has been confirmed by so many professional friends working in Hyderabad, Bangalore, and Chennai. Though in RBI, registered value report is not mandatory, it is not required. But at times now, the officers are also demanding that, okay, give us a CA or a merchant banker certificate for the transaction which we are incurring. Also, give us a copy of the registered value report which would have been issued in another capacity. Because RB would have issued a report in Companies Act for issuing shares. Though RBI is not required, but still they are asking. And when a regulator asks, you cannot say this is not in your guidelines, you should not ask. So you cannot argue with a regulator. If he is asking, people have to give. So there are people, RBI has accepted informally that yes, registered valuer is there, they are recognizing their value. But this is the problem which for one transaction, a client has to go for 3-4 places. Now this may end very soon because in April, a draft values bill have came. So ministry issued a draft values bill where they wanted to highlight and make a full act. Currently, valuation is under only section 247 of Companies Act. So there was only one section in Companies Act 2013. But now, since last 3 years, the profession has evolved so high, the government see the value in the profession and they want to give a different class. So just like we have a CA, CS, ICWA and other professionals, we have a separate class, they wanted to give valuers also a separate class. So registered valuer would be given a separate class once the bills comes into the act. Now what is expected from this bill when it comes into the profession and when it comes to the life? That it is assumed and presumed that later on in India, only one valuation fraternity will prevail, and all other acts, if they need to get a valuation done, they will appoint these valuers only, so that for one valuation report will suffice in various acts. Then this will one happen will be a very good opportunity because once you see the preamble and once you see the discussion paper on this committee who presented this valuation bill, in the preamble and in the discussion scope, they have written in the summary part that first, when this bill becomes act, immediately it will again apply on Companies Act and IBC, currently as it is in previous position before the bill comes into picture. But very soon, after the Bills Act comes into place, it will be the duty of the institute, that is the National Institute of Valuer, which will be the proposed regulator. It will be their duty to look into the positions that they will aim to include 14 acts in a phased manner. So in the concept paper they mentioned what are those 14 acts where they want they should come under the purview of the Valuation Act. So to name a few, it would be Banking Act, Income Tax Act, SURFACI, FEMA, SEBI, Black Money Act, LLP. So there are so many acts which they have mentioned. And imagine when currently only Companies Act and IBC have given so many professional opportunities to members. When we got these 14 acts, so the number of what we see, 3,000 registered valuer, would be too minuscule. Even then, we have 20,000 registered valuers also, then there will be enough opportunities for everyone. I cannot commit when it will happen. It may happen in 6 months' time, it may happen in a year's time, or it may happen with their own sweet time. But it will eventually happen because that is in the process of ministry. The draft papers, the draft comments, guidelines to submit was on 29th of May. A lot of people submitted their comments. Now the ministry is discussing on what all the comments people gave. In this one of the act, they missed to mention GST. So in the 14 acts, GST was not there. But then this point was raised to the IBBI and the ministry that you missed GST. Then they say it was an out of sight error. We will be including the GST chairman is a part of this committee who will be governing the Valuation Act framework. So when the chairman of GST Council is there, eventually GST will also come into this 14 acts. So this would be one of the opportunities which we all will look for, and this would be one of the brighter areas where huge opportunities will come, because in black money, in banking, huge opportunities will be there, because banking is the industry where maximum assignments happen. Nowadays, not even nowadays, even before also, any bank which gives a bigger loan, and if we talk bigger loan, more than 100 crores and above bigger loans, every bank will request for a project feasibility study. They call it TEV, technical evaluation reports. So these kind of studies will be now coming into the domain of registered valuers or valuers under these domain, because here it will include plant and machinery and land building also. So it will be a huge opportunity for professionals who can work in these kind of domains from now onwards, because the time to get prepared is when things is not in place. Because if we don't prepare by now, then actually the things will start in place, then we'll not have time to prepare. Because immediately may happen after 1 year, government says, okay, all bankings will include, will allow all registered valuers who have a TEV experience. So we need to start working in the new field. In the next, what will happen? We'll have 4 institutes, 4 different pillars in the next bill. National Institute of Valuers will be one of the institute, will be governing. We'll have a valuation institutes now. Earlier, currently, RVOs, registered value organizations, duty is to train, give a training of 50 hours, and after the members becomes, they also register and train them and control them. Now this will be excluded. Now we have Value Institute who will only do a training. Then we will have a valuation professional organizations, VPOs, who will only do it after monitoring of, after the member passes the exam. Then they will register the members under them and control. So that will be a new scenario. Since the IBC has started a concept of 2 years of diploma in IBBI, so a lot of people have taken that. Considering that success, the proposed structure in the new bill has also given. So what is the current structure now? Current structure is any professional, CA, CS, ICWA, MBA, having more than 3 years of working experience in the professional field, he can apply to any RVO, complete 50 hours of training, give the exam and become registered valuer. In future, that will not happen. In future, they are making 2 scenarios. A member, any student can after class 12 register for valuation course. It will be a separate 4-year course, or any professional can register for 2 years course. So you cannot directly join. You need to clear the entrance test, just like we have for CAT and PMTs. You clear entrance test, then you choose a registered valuer organization, institution, just like IIMs. We have so many IIMs. You have so many valuation institutes across India. Then you clear the exit test, and then you can again register. So that will be a long story. It should take time, 1 or 2 years to get this bill approved. Then this will come in place. Those people who have registered in the old regime, they will get 3 years timeline to give the exams in the old regime. Now, as we discussed, the starting point is section 247 of registered valuers. Now, I'm assuming that all of you know section 247. So I'm not going to discuss what is section 247, but I'm going to mention something which we need to be very careful, very basic, but a lot of people missed it, and a lot of people were issued warning letters and reprimand letters from various RVOs. And what is the basic mistake we did? Now we all understand, being a registered valuer, whatever I do is can be scrutinized by any of the agency. It can be scrutinized by my ICA RVO. It can be scrutinized by IBBI, by MCA, by my own ICA institute also. Anybody can scrutinize that. So what does section 247 talks about? It's a very simple section. It says that any valuation in Companies Act can be done only by registered valuers. So we understand this. It says the appointment can be done by an audit committee, or in absence of audit committee, board of directors. This is also very simple, but then a lot of us do not understand it, or they do not want to understand this. Now, what is the issue happen on this section, and this particularly this point? So this section says appointment of Sumit Dhadda can be only done by either audit committee or a board, assuming you are talking of a private company. So ideally, my private company of that board should give me an appointment letter. Then only I should do a valuation. This is a preferred approach. But now, what was happening in between? And last 2-3 years, it happened a lot. Suppose I am a practicing chartered accountant and I am not a registered valuer. So I am a practicing chartered accountant, and there is a company whom I give regular consultancy. So before this act came, I used to also do valuations for them. But now being a registered valuer has come, and I am not a registered valuer, so I cannot do the signature. So what I will do is, I will go to Karun Nagpalji and say, now Mr. Karun, I know you are become a registered valuer, so I need to do a valuation. And if I am a new valuer, what I will say, yes, I would love to do valuation, because that's what I have taken degree for. So I would be happy to do a valuation. He will not tell me that I will not give an appointment letter to you. He will say, you just do a valuation, and we will start talking of valuation. Then he will come to me, then I will say, Karunji, and say that, look, I will give you appointment letter to do a valuation, because there are two reasons. One, I'm afraid that you might take my client with me. So if I introduce directly to you and say to the company that, look, company, this is Karun, who is a registered valuer. He can do a valuation because he is authorized by IBBI, and since I am not authorized, I will not do it. So it may happen that he gives so good services that next year company says, Sumit, I don't need you. I will directly deal with Karun. It may happen, and which is possible. So to safeguard that, the professionals are not giving appointment directly to the registered valuers. So from the company, they are taking appointment in their name, and then they are subletting it to registered valuers. Initially, when the laws were not very clear, or there were no benchmarks, no legacies, a lot of people accepted that. And when it happened to the peer review, and when IBBI insisted all RVs to do a peer review and submit a report, it was found that very few RVs do not have an engagement letter from client directly. Engagement letter was always by a third firm, which was not a right way of practice. So the IBBI and a lot of RVs issued a warning letter. So my humble advice would be to all the professionals who are working in this field, at least RV, at least get engagement letter from client directly. This will always safeguard you. I'm not commenting what would be your sharing arrangement. Suppose you referred me a client, I referred you a client. You want to share officially, that is separate. That I'm not commenting, and that is not my that's not the Companies Act outlook also. But what is the Section 247 outlook? That your appointment should be from the board, so that your independence can be maintained. Because if I am not having access to the board, then that means the information which will flow may not be actual information. It may happen, because if I don't have access to the company directly, it may happen the person who is giving me appointment, he is changing some information. So you need to have a direct access to the company. That will always help you. Now the valuation rules have, now it is almost 3 years now, the rules are pretty in place. You need to follow those rules, mandatory. You have no choice, no options. You need to look into IBC guidelines, and IBC has given separate standards that you need to follow, valuation standards of IBS for doing evaluations. Very recently, a latest development happened very recently, last 2 days back, and this is mandatory for all professionals, whether you are a registered valuer or not. Because if you are a registered valuer, then you have no choice, it is mandatory. But if you're not a registered valuer, but you do a valuation under your CA degree, even in that case, you need to read these regulations so that it will give you an idea that what should be there. So there is a very beautiful documentation published by IBBI which says that what you should give in caveats, what should you do write in limitations, and what you should write in disclaimers. So it's a 17-page document, but it will give you a very good insights. And in the first page itself of the document, the IBBI document says, and it admits that a valuation is just an opinion. Our opinion may not actually give you the actual transaction. So if I'm giving a fair value of one item as 100, it says we do not guarantee that you will be able to sell it at 100. You might sell it, be able to more price, or may even sell it at less price. That is not our guarantee that this 100 is actually the price you will get it. This 100 is what I feel. But what was happening, why this, the reason this caveat and this document needs to be issued? Because what was happening, if you see the old reports, and I'm not talking of RVs or any old report you open, if there is a valuation report of 10 pages, 6 pages belongs to the caveats and disclosures, and only 4 pages will be actual hardcore valuation effort. And what we used to write in 6 pages, that all the projections are given by management. I have not done anything on it, and if anything goes wrong on it, do not even call me because I don't know what it is, because this is not my baby. It is given by client as it is. So you just wash your responsibilities out of it and you go away scot-free. Because if I'm writing something on the report that I am not responsible for projections, whatever it may be, client ne jo diya wo dhala, do not say anything. So I'm telling people that I'm saying what I'm not responsible. But then in court of law, they say, and then because then what was the problem of this disclaimer? Nobody can sue me in the court. So if my party, so let's say I'm doing a valuation of a company and there is a minority shareholder, he want to go against me. He cannot go against me because my limitations and disclaimer says, ask management. Then this problem became a little big problem. So it was discussed with all ministries, IBBIs, all RVOs. Now what they decided was, we do not say that do not give any disclaimers, do not give caveats, limitations. In fact, they gave notice to few valuers who have not given any caveats, limitation, and disclaimer in the report. They say, no, you have to give some caveats, limitation, disclaimers. Now, what they say, you cannot give a negative disclaimer that I have not done it. So you need to give a disclaimer that yes, I got the projections, I only reviewed it, or I found the assumptions taken by management is okay or not okay. So I need to say yes, what I have done. So instead of saying I have not done anything, you need to say I got something, but I did something. Whatever you did, you need to write. So we need to be very careful. So and this becomes applicable from 1st of October 2020. Early adoption is always preferred. So you should give a good reading to this and it will help you. Especially for the people who are coming into the practice very new, it will become a good concept checker for you, what to write, what not to write. Because whenever your next peer review happens for IBBI or RVO, which will probably happen in April or May, or whenever it will happen, they will look whether you followed these guidelines or not. So we need to be careful on that. Now, price or value will always have a debate, and who is responsible for what. We need to understand we are always interested in deriving value as a valuer. Client is always interested in a price because client always comes with a price, and it is the professionalism and it is the smartness of a valuer, how he can convince client to come more towards value than stick towards price. So Warren Buffett always says price is what you pay and value is what you get. So it is always different. Whatever price I would have paid to earn my CA degree, all my coaching classes, this is just nothing compared to what value I am getting. So whatever membership fees I am paying for my ICA membership, for me maybe price is nothing. but the value which I'm deriving because of the power of the degree which I'm deriving is huge and potential, and nobody can value one-to-one on that. Valuation is always what people are willing to pay. Now, this kind of mindset actually disturbs the whole valuation philosophy. Because when I say whatever people are willing to pay, that means whatever I'm doing exercise goes for a waste. Because if I say someone, let's say the value of, let's say, we know what was happening in telecom sector. So if I look into a telecom sector valuation and say, sir, since AGR dues are due on Vodafone, Idea or any companies, the value may be, let's say, 10 rupees only. But if somebody is willing to come and say, no, I want to buy at rupees 100, because that's what the value I think, then your entire things goes for base, and market says whoever pays the money will always have an upper hand. I think I'm running short of time, so I'll skip the examples of Flipkart and Paytm. This example I always just used to tell in a nutshell that despite having losses, these all companies are incurring losses since day one, and still they are in losses, but still they have a big valuations. So valuation is not just because of P&L, it goes more than that. And as a valuer, we need to understand that accounting numbers are only the starting of valuation point. They are not the end of the valuation. Accountant and valuer, that's a basic difference. Accountant will only look for cash flows, positive or negative. A valuer will look what will happen in future. And this is what Harsh Goenka, who was the chairman of RPG Enterprises, also made a tweet that he was also unable to understand why the all startups are having losses. Their valuation was increasing very high. I'll just quickly take last 5 more minutes in valuation issues. What is the biggest problem in valuation? The biggest problem in valuation is one, biasness in valuation. And when I say biasness in valuation, Professor Ashwath Damodaran has given a classic statement, and he says, you tell me who paid for the fees of valuation, and I can tell you how much biasness has come into the valuation. The point he was trying to bring is, suppose if a buyer has asked you to do a valuation, then be honest to yourself. Will you give a valuation high or low subconsciously? He is not even asking you to do any fudging with the number. But since the buyer has asked me to do value, normally my conscious will always allow me to go lower, because my interest is linked with buyer, because he's paying me the fees. So indirectly I am influenced by his behavior. Similarly, if it is the seller has asked me to value, I will definitely take higher projections because I am inclined to seller now. So for same asset, depending on who is paying me the fees, my entire mind shift changes and nobody can escape. So this everybody talks. I cannot train my subconscious mind. नहीं नहीं पैसा हाथ का मैल है कोई फर्क नहीं पड़ता जिसने दिया, because even if the client will not say, sir, do not do anything on valuation, but my subconscious will say, because my interests are linked with the client, I will try to be more conservative. Second, now the valuation has become too challenging because of the uncertainties. And what we have seen in last 6 months, this uncertainty could never ever captured by any models. So if the things are uncertain, how can you do a value? But the funny part is, and I'm sure those who are into practice of valuation will realize this, the funny part is we are still not recovered fully from the pandemic. Still, a client will come to you and say, I want to open a startup. Very well, entrepreneurs should be promoted. Next year, my sale would be 50 crore. You have not even started a company. You want to make a projections. And believe me, somebody came to me last 2 days back. I need a valuation done. And my price I want 2,13,000 per share. So you are so specific. I said you have not even opened a company. Your valuation, you want 2,13,000 per share, because he is giving me a story that I will now in pandemic we will make a healthy product, people will buy, internet will open, and so now there is so much of uncertainty. Now there are two options: either you take a risk and say, okay, let me sign, which would be a very disastrous step, or to say no to a client, which is eventually what I did. I will not say it is the smartest thing I would have done, but when there is so much of uncertainty, you cannot give a number which client wants. because there is uncertainty. I need to justify. Now the courts have also mentioned the valuation is becoming now black box model, where the valuer does not know what is happening. It's only the Excel that is running the model. So if the valuer does not know what is happening, do not do that. Take example of any complex valuation. If you don't know what is happening, you will just say Excel has calculated, client has given projections, we have put in Excel and the DCF number, throw the number. Court will not like this. Information overlaid, we have too many informations which may kill the valuation. We need to be very specific what exactly we need. Most important, now we need to be very careful on what we document for judgments. Nowadays, courts are asking valuation, and ITAT Delhi has asked a valuer, a merchant banker, tell me why did you took beta 1? Tell me why did you took discount rate, terminal growth rate as 5%? Have you ever done a study of the sector? Now, when government is asking these questions, we need to be prepared. And normally we say is, कर दो क्या सब करते हैं. You cannot go with this approach that everybody does it, let me also do it. That cannot be my argument when government asks me, why did you taken 5%? Sir, I have seen 10 reports, everybody was taking 5%, so I have taken 5. That cannot be a logic you can take. So you need to be very careful on what you choose. Have some documentation just to justify how you are taken. Last but not least, most important before that, now you need to review the projections and you need to review the assumptions. You cannot say whatever client has given, I have accepted, because court has written, if you write like this, whatever client has given and I have accepted, then Delhi ITAT announced in this order, then you have not done the job what is expected from you. Your expertise lies in doing evaluation by looking into the projections. So if you are not looking to the projections, you are not doing justice to your duty. So we need to be careful and do some working, some documentation in our report, at least in our working papers, what we did on projections. Last, be very careful in punching data. Human errors cannot be justified. I cannot say my article did the numbering punching, so there was an error. This actually happened, a classic case in one of the biggest valuation in Mumbai. 42 crore goof up happened just because the person who was punching the number, instead of putting 21 crore directly, he put minus 21. So the formula and Excel will only do what is feed in. So formula was already put minus, so minus minus became plus, and it became a huge issue on the client. This was caught by income tax department and became a huge penalty on the client. You cannot say to a client, "Aapko bhi dekhna chahiye," because if you have issued a report, it is only your responsibility. Client is not supposed to look into your reports. You need to be very careful. Now, this is all about valuations. Last 2 more minutes on exams. More Tarun will take on. So Oscar Wilde has given a beautiful quote. Nowadays, people know the price of everything and value of nothing. We often know the value only when we lose it. Take example of good health. And we all have, no, good health is free. You can always take care of health, but we realize only when we lose it. Now coming to the most important slide and very scary slide. And the scary slide is, what is the synopsis of people who have attempted exam and the pass percentage? Till March 2018, till March 20, the percentage was ranging between 12 to 16%. So if 100 people are given, 16 will pass. Though for a CA students, it is still a very happy number. Because when we did CA, the number used to come in single digit percentage, 2%, 3% of CA finals. Still a double digit number still gives me happy. But now what happened in April to June? So in April to June, 100 people attempted in June. No exam happened in April and May. Only exam started in June. 100 people, approx 99 people attempted and only 6 people passed. So the number shot down to 6% drastically from 16%. Now, one of the reason of why this low number has happened in June, 2 reasons. One, the syllabus got changed. Second, exams got little bit more technical. Third, people were not in a mind frame to give exam. You need to also see the fact, last so many weeks they were into lockdown. It just opened. So you are at very home scenario to give exam. The tempo was not there. So that is the reason people feel. But this should not be taken as a benchmark, and it should not be taken that now exam is tough. Tarun will explain more on how we can prepare. But I got a very funny picture recently, so I thought let me share with you. And this funny picture is exactly like now this valuation exam may look like something like this. Question may look very simple to you, but if you are not clear on concepts, you'll get confused like this gentleman. All answers look similar. But if you are very clear on concepts, exam is like a cakewalk. And I'm sure people who are very clear on basics, you may not be expert on FM, do not be very expert on formula. But if your fundamental basics are clear, just basics, exam can be passed. I thank you all for patient hearing, and I thank Sumit ji for giving me the opportunity. Now I request Sumit ji, I hand over to Sumit ji, and I think we'll get more insights from our professional Karun, who is a insolvency professional and registered valuer also. So he has passed both the exams of IBBI, and he has both the practical experiences. And thanks, need little smart work, luck, and some guidance from professionals like Karun to pass the exam. Thank you, Sumit. Over to you, Sumit.
Thank you, Sumiji, for wonderful deliberation and the example you shown regarding the technique asking the questions in the exam 2024. The questions सारे आंसर उसके सही लगते हैं बट समझ में नहीं आता है कि आंसर कौन सा मार्क करना है अपने को. So I request Karun ji to enlighten about the examination, how to clear the examination. Karun ji, you are mute.
Yeah.
All right.
Yeah. Is it audible? Thank you, Sumit Dhadda ji. Very well
Yes,
explained
perfect.
as always. So you all must be excited to know how to crack this examination now after listening to Sumit Dhadda ji. So I am quickly sharing. I will not take much time. Will explain you in 10-15 minutes. So I am sharing my screen and will walk you through what should be your strategy to crack the examination. Sumit ji, can you see my screen? Sumit ji, are you able to see my screen?
Yes, yes. Karun ji, yes.
Okay, so why registered valuer exam?
Now you're mute. Now you are mute, Karun ji. No, kindly unmute you on the StreamYard.
Is it audible?
Still not. Right, sir. Right, Karun ji.
Okay, sorry about that. So, as Sumit have explained that registered valuer examination is currently unregulated by IBBI under the registered valuer and valuation rules. And later on, NI we will take over the IBBI and it will manage. So currently it is all messed up because merchant banker, chartered accountant, at some places registered valuer have to do the valuation. And at times we need to get the multiple reports. So that is why government is planning to have single regulator, and that regulator will, as per their recommendation, they need approximately 2 lakh of valuer in times to come, maybe in next 4 or 5 years. So in India, we require 2 lakh valuers as per their report within next 3 to 4 years for all the categories. And at this point of time, there are approximately 3,100 registered valuers. So it is the high time for all the professionals to crack this examination, because going forward, being a chartered accountant, you won't be able to sign a valuation report. So NIV will be constituted, and this valuation will become full-time profession under the new regime. Valuer will be called as a associate or registered valuer, similar to associate chartered accountant and fellow chartered accountant. So going forward, that person will be responsible for valuation under all the statutes, be it is IBC or Companies Act or Banking Regulation Act. And initially, this framework will allow you to become a registered valuer for initial 2 to 3 years. Later on, it will be 2 year full-time profession, and you will have to pursue that 2 year profession to become a registered valuer, even if you are a chartered accountant. So that is why it is currently it is the high time to become a registered valuer. So if you see the data I have in front of me, at the top we have around 3,000 valuer currently registered under the registered valuation rules with IBBI. And at the bottom we have the data for different countries, and for New Zealand, Australia, England. For less populated country, we have around 55 valuer per lakh of population. And in Europe and America, we have approximately 16 valuer per lakh of population. And considering this 16 as the basis, we require at least 2 lakh valuer in India in times to come, once we have all the acts under one ambit, under one authority, under the National Institute of Valuer. So let us now talk about this examination, IBBI Registered Valuer Examination. So currently being in 3 categories: land and building, plant and machinery, and CAs are, as Sumit said, CAs are eligible for securities and financial assets category. And these examinations are conducted at NISM centers, and IBBI is conducting these centers, these examinations, and the center is available at all locations throughout the country. And the time you can choose according to your convenience. So before that, before going for the examination, one has to compulsorily complete this 50 hour of training with an RVO. So there are 14 RVOs. You can choose any of these 14 RVOs, enroll with them, and undergo this 50 hours of training, and then you can appear for the examination. So for those who have already become the member of registered valuer organization, I'll let you know what should be your strategy to crack this examination. For those who are planning to pursue this valuation course, so first of all, this is the presentation where I'll show you the walk to become a registered valuer. So you need to first check the eligibility criteria. So one need to have 3+ years of experience after passing his CA. So once you have 3 years of experience, you are eligible to become a member of RVO. So then you have to approach to the RVO and become the member of that, undergo 50 hours of training. And then after completion of training, RVO will give you a certificate for participation. You need that certificate for applying for enrollment for the examination. So you have to create your profile at NISM portal, and then upload this certificate along with your other certificates, your proofs and all, and then choose the exam date and timing as per your convenience. There are various slots available, so you can choose the center and the exam as per your convenience. Then once you pass the examination, you will have to file your application with IBBI. So RVO will assist you, and thereafter, once the application get approved, you need to undergo 1 day of complete training to get the COP, certificate of practice. Currently, a CA can have multiple certificate of practice. If you are a chartered accountant, you can simultaneously have, unlike CS or CA, for registered valuer, you can have a COP for registered valuer as well as CA. But later on in the new regime, they have planned to restrict this, and they will say that you will have to surrender either of the COP. Then these are the list of RVO. You can choose any of these RVO and become the member of RVO. Then this examination is for 3 category, as we have discussed. So CA is eligible for securities and financial assets. The examination is computer based, completely objective type, multiple choice questions. 4 options will be there in each question, and for correct answer you will get 1 mark, and for incorrect you will get minus 0.25. So you will have to be careful because negative marking is there, and you have to secure 60% to crack the examination. In total, you will see 90 questions and 80 questions carrying 1 mark and 10 questions carrying 2 mark each. And these 2 mark questions are basically of case study. And then result you will get immediately once you press submit button. That will be displayed, and you can obtain the printout from your test center. And if you pass the examination, you will immediately after 15-20 days you will get the passing certificate from IBBI. And no material is allowed, no mobile phone, only you can take the calculator, normal calculator along with you, and rough sheet will be provided by the center. And however, you can use the Excel for your calculation, and either Excel or Apache Open Office they will provide. Then this is the fee structure to become the registered valuer. So around 5,000. So this is for ICI RVO. Different RVOs are charging different fees. So more or less they are same. And this fee structure, initially you will have to become the member and then undergo the this 50 hours training, and then examination with the IBBI. Then we have the enrollment fees after passing the examination, and annual membership fees is there, and then COP fees, and separately you will have to pay the 5,000 fee to IBBI. So this is the syllabus. If you look at the syllabus, that is pretty vast, and you need a strategy to crack this examination. And I believe, being a chartered accountant, you all understand the basic general laws, Companies Act, Transfer of Property, Stamp Act, Income Tax Act, and all. And you need to focus upon other than these general, because in valuation related stuff they will ask the tricky question. For income tax and for transfer TPA or Companies Act, they will ask the simple question. If you give one reading to the subject matter, you will be able to easily answer the questions. But in case of valuation, you have to through with the concept and the understanding of the valuation stuff. So to begin with, you can start with the fair value measurement Ind AS. So they have included in the new syllabus financial instrument and impairment of asset in Ind AS 36 and 109, and professional and business ethics. These include the company's registered valuer and valuation rule, and that is very important. So thoroughly you will have to understand that. So serial number 1, macroeconomics. You do not need to spend much time on economics. Just give it a quick reading. And number 2 is just the basic for chartered accountants. 3 is the registered valuer and valuation rules. You have to read that thoroughly. 4 is the general law. So for the first 3 or 4, you must be aware of. For IBC, you will have to go through. So the good thing is entire IBC is not covered. Only the CIRP and CIRP regulations and the overview is covered. The individual insolvency, because that is not yet notified, so that is not included. And SARFACI and SEBI regulation. So you can get the material from ICI if you plan to become a member of ICI RVO. So that is pretty good. Then we have the overview of valuation premise, purpose, valuation standards, what is the process, about documentation. So material is available on ICAI website. So they regularly issue the material. So they have a set of valuation standards as well. So they issue the valuation insight, so you can go through that as well. And the valuation approaches, valuation application. So this 35 marks is very important, and you have to go through each and every concept thoroughly, because without this you won't, it is impossible to crack the examination. The various the models of application, valuation application, so equity or business valuation, Michael Portal, 5 forces, SWOT analysis, McKinsey and all, forecasting approaches, CAPM. So this you have to thoroughly understand and do practical as well. So you can refer some good valuation material for that. So if you plan to become member of ICI RVO, so they provide you with the LMS. So various presentations are available at that portal. And then we have the judicial pronouncements on valuation. So these are 6 in number and carries 2 marks. So if you can quickly go through them, and because 2 marks are also important, people generally get 58, 56. So that securing 55 or 57 marks is pretty easy. Securing more than 60 marks become difficult at times. So 2 marks at that time will become very important. And the practical case study, so that covers 20 marks. So they ask you the free cash flow from firm, calculation of beta and all. So you will have to do some practical questions also. But I would not recommend spending much time on that. If you spend 3-4 days on practical aspect, that will be, I think, will be sufficient. And as I said, the strategy, so valuation related stuff carry around 2/3 of the total syllabus. So if you concentrate on valuation, you will be easily able to cover 60 to 70% of the syllabus, and rest all just go through them, go through all these topic, give it a quick reading, and you will be able to easily complete your syllabus and crack the examination. After registration with ICA RVO, so LMS portal, as I have said, so they give you the access to LMS portal once you become the member of ICI RVO, and practice material are there, and you can go through that. They also give you the hard copy of the evaluation material. So that is in different modules. They have 4 modules for valuation. So 2 are dedicated to valuation related stuff. And apart from valuation, I would not recommend you to spend much time, because that they want, the purpose is not to ask the difficult question from the non-valuation stuff. So that is the basic. Just give it a couple of readings and you will be fine. And what I would say, that if you are planning to, and if you have given your examination, do not waste time, reappear immediately after you fail the examination, because if you fail the examination, you will be able to understand how it is framed and where I am lagging. So you will be able to easily cover up. And I would say best of luck to all of you, and I will suggest you to go through this examination ASAP, because in times to come, this examination will become difficult, as in the new syllabus from applicable from June, as we have already seen, only 6 candidates have passed out of 99. So that is one of the reason is the syllabus has been revised, and few accounting standards have been included, and they have also increased the scope of the examination, and they must have developed more new fresh questions in their question bank. So it is the right time. If you do not crack this examination now, it will definitely become difficult in times to come. That's all I have, and best of luck for your examination. Over to Sumit.
Thank you, Karunji, for your wonderful deliberation about how to clear the exam. Sumitji, you want to add anything, or we can conclude the session?
Just one line to add what Karun has rightly mentioned. If you could not clear, then just reappear fast, because now what is happening now, booking a seat becomes very difficult now. It is not easy to get seats in various parts of this country. Due to COVID, seats are limited. So it may happen I fail today, I will get exam next 1.5 months later. Then the tempo gets broken. और एक बार whatever you have studied that would be sufficient for you to pass. So अगर एक बार नहीं हो रहा है तो दोबारा जल्दी से दे दीजिए, पास हो जाएंगे. Rightly mentioned, yes, mentioned. I think then that should be sufficient. If you have any questions, Sumit ji, which
sir,
we got one question. Can a RV become partner of an entity which is not a member of RVO, whose RV is member? I'm not able to understand question. Can a RV become partner of an entity which is not a member of RVO, but whose RV is member? If he's asking for multi-partnership, yes, then multi-partnership can happen. A lot of RVs have become. A lot of RV entities have become recently. So I am from ICAI. You are from IOV. Partnership can happen. That is acceptable. If that is a question.
सर एक रवि कुमार जी का क्वेश्चन है, व्हाट शुड बी द बेस्ट क्राइटेरिया फॉर एस्टिमेटेड टर्मिनल?
Best criteria for estimating terminal growth rate would be one. We need to always document that our terminal growth rate will be less than our Indian GDP if we are valuing Indian organization. Then which sector they are valuing. So if you are valuing, let's say, textile sector, try to get some report of the textile sector of any industry. Let's say Chamber of Commerce, PhD, they generally issue a long-term growth rate of these countries or of these sectors. Or there are a lot of research houses who publishes their magazines every quarterly that what do the growth they foresee. That kind of documentation can at least work out in our favor. Or else, if nothing we find, we can find something from global sources. That globally, take example for in case of internet. Now we can say mobile is at every small place, so internet sale will go high. So some study would always help us to find it. So that between 2 to 5%, any study will always help us to find that.
Yes, sir. Definitely, it will help a lot for preparation of examination purpose. And many persons members are failing, but today's guidance is very much important. So Sumit ji, we would like to close the session, and a very insightful session today by both of you. And thank you for joining and sparing your valuable time with us.
Thank you, Sumit ji, and thank you, Karun.
Thank you, Karun ji.